The monthly candle just closed for Bitcoin and it printed a DOWJ candle underneath the 50 EMA. These are two bearish indications signifying a lack of strength and indecision in the price action that could potentially result in a reversal. Let's go ahead and discuss in the charts. Okay guys, welcome back to the channel. Thank you for tuning into today's video. I hope you're all having a fantastic day today. We're here to talk about Bitcoin, the monthly candle close, the short-term price action, the technicals of financial markets, and so much more, guys. Before we get into it, smash the like button, hit that comment button, subscribe to the channel for daily videos on all of those things and so much more. You can also find us on Telegram. That is going to be the second link in the pinned comments. You'll get charts, you'll get analysis, you'll get videos, educational posts, news events, and so much more. If you're interested in our VIP channel where you post a whole bunch of trades every single day with altcoin and Bitcoin and Ethereum, you can find more information right over here. You can see our trading track record, and obviously if you go through our pinned comments in that free channel, you can find all the membership details, etc, etc. Not only will we get access to all of our exclusive trades, you'll also get access to 2 VIP groups, one of which is our group chat. Let's go ahead and get into a video starting off with the market data. February we saw 0.03%. And I want to highlight that for a second. This was, in the history of Bitcoin, out of every single monthly close, every single piece of data we have, the smallest month in terms of volatility, in terms of rate of return from the start to the end. 0.03 was the smallest. The second smallest was 2017 in January, which was 0.04. This brings us to the monthly candle. As we can see, guys, the monthly candle closed as a DOWJ candle. A DOWJ candle signifies mass indecision. It signifies mass indecision and potential reversal occurring, particularly after large wicks. When we see DOWJ candles print after very strong wicks, whether it be upside or downside, it generally suggests that that trend is exhausting. So this is just but one more piece of evidence we have to support our claim that we have been losing strength at this macro resistance for quite some time. That macro resistance, guys, being at that 25k level. We've been talking about this for weeks. We have been talking about this for a very long time, guys. Now, as you've been watching the videos, you would know we've had bearish divergences, we've had a rising wedge formation developing, we've had decreasing momentum, velocity, speed, we've had compression. Absolutely every technical indicator is screaming at our faces now on the smaller time frame, and now even moving up to the daily, the 3-day chart, that we are expecting a reversal. Now our monthly candle close has signified that this resistance range here is incredibly strong. Not that we didn't know that already, but it is signifying a DOWJ candle is printed. We'll come back and discuss that when we get into the analysis, but it is definitely something that is quite alarming and something that we should be paying a bit of attention to. Looking at the volatility for the 30-day period, we are on the way down. We're at 2.59, and the 60-day period, we are at 2.5, again on the way down slightly. Moving on to liquidations, we have seen a very slight increase in liquidations by 7% to 75 million, and our 24-hour volume is sitting at 80 billion. We're at 18% above the last 24 hours. Looking at overall liquidations in the last couple hours, we're looking at more or less a 24-hour period. We have seen a lot of chop over here. We saw a hell lot of shorts liquidate. We've seen a lot of longs liquidate, and we've seen a lot of chop. The price action has definitely been choppy on the short term, and we'll cover that when we get up to it in today's video. But let's go ahead and get into the market data for the traditional markets. So the DXY saw a little real pullback, and we said a pullback was likely for the DXY as we reached at 105 level. We did see a small pullback towards that first target, which was in fact 104.1. We saw a nice little bounce over there. We are currently in the midst of a bounce. A potential rally toward the upside is still going to be underway. Remember, guys, this trend over here, this black line, is in fact an uptrend. If you get confused about trend lines, go ahead and add a little arrow to the end. We are in an uptrend. So currently the DXY is in an uptrend. Losing this uptrend will result in that breakdown of the uptrend and therefore a development of a downtrend. The downtrending resistance line is in fact this trend line here. So what could happen over here with an uptrend over here? We have a downtrend over here. We have two options. Option number one, we break that downtrend first and we continue through that resistance. Option number two, we fail to hold this uptrending support and we break down, and then this downtrending resistance becomes that level we need to break above before we continue back upwards. So a few different possibilities there. Keep an eye on it. We're in this apexing zone now between downward resistance, upward support. So the DXY is going to start becoming a little bit less volatile in the next few days while it decides to make the next move. Moving on to the S&P and Dow Jones. The Dow Jones has continued to fall toward the downside. We have officially lost the 33,000 level, our next target being 32K. Again, if the DXY is able to push higher, we will most definitely see that Dow Jones continue downwards. S&P 500 losing not only the 4,000 but as well as the uptrending support. Again, guys, if the S&P 500 continues toward the downside, we will expect that DXY to be facilitating that move toward the downside. Thus, we can expect the DXY to be rising as the S&P falls. Again, the next target, guys, we are looking at whole numbers. 3,900, 3,800, and that 3,700 to 3,600 range as that major base of support, a potential bottom point before another bounce. If we do reach that point, we're looking to flip more bullish in the market at that point. Looking at the bond yields, we are creating new highs here, guys, smashing right over that 4.86% range, breaking pretty close to our 5% target. Remember, our target is 5% here, so we're getting quite close to it. Again, as those bond yields rise, we do expect the DXY to rise, as it does give us some leading information on the strength of the dollar. Let's get into Bitcoin, guys. There is so much to talk about. Let's go ahead and get started. I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. So first and foremost, starting on the larger time frame, and then we'll go ahead and break it down. So let's actually start on the really large time frame. Let's go back to the macro and talk about this monthly candle, talk about the technicals, and then go to the daily and then do our small timer for analysis. So currently, guys, on the weekly chart, you can see we did have that rejection from the 200 moving average, and we are currently sitting underneath the Gaussian channel. The Gaussian channel being this red zone over here, okay? And what I do want to note is we have not yet seen a candle pierce the Gaussian channel, because we had a green candle here. If I go ahead and turn the Gaussian channel off, you'll see we had a green candle here, we had a red candle here, followed by a green candle, of course, but we didn't have a green candle pierce the Gaussian channel. If we zoom in really close, we didn't pierce that Gaussian channel. We actually opened and closed right toward the downside. So technically, we have not actually broken into the Gaussian channel yet. That is still going to be acting as a downward sloping resistance, which could push that price lower, like we saw all the way back, guys, in that first bull market, in that first bull market bottom all the way back in July 2015, we saw a similar thing occur. So potential rejection from that Gaussian channel could still play out. Of course, if we do need to break in here, we do also need to reclaim that 25K level and get back above the 200. As you can see, the 200 is slightly pushing up. It is now sitting around 25,200. So 200 moving average resistance is actually moving up ever so slightly, which makes it even harder for Bitcoin over here. Moving on to the 50 EMA, guys, you can see we have closed a monthly candle below the 50 EMA by that DOWJ candle print. And like I said before, this is the weakest month in Bitcoin's history we have ever seen. We're not talking about weakness and we're dropping price, we're talking about overall volatility, overall price movement from month open to month end. It is the weakest and smallest monthly change Bitcoin has ever seen. Now, there's a good reason for that, right? And this is where you have to apply a little bit of an extensive analysis when looking at these things and take kind of the whole perspective into account. Because if 25k was not such an important resistance range, wasn't a 255-day resistance range, wasn't a resistance range that was facilitating both the 50 EMA, the 200 EMA, but also the horizontal resistance, which would trigger a macro uptrend. If it wasn't all of those things, then the doji candle would be strongly signifying a move toward the downside. However, because we have so much resistance layered at this level after such an explosive move, it is a little bit more expected that we're going to see this doji candle print, as we had so much indecision, decreasing momentum and velocity and speed and all that kind of stuff at that resistance range, so it is more likely. In this instance, taking a doji candle at face value, when we see a doji candle print after an explosive rally toward the upside, or a doji candle print after an explosive rally towards the downside, it generally signifies a reversal in trend. So this doji candle is signifying there's an increased probability that this monthly candle here is going to be a red candle. Now, it's hard to say where it's going to go just from the analysis of the candle. We'll talk about where it can go in terms of the price action, but just looking at the candle's not really going to tell us where it's going to go, but it is showing us there's an increased probability based on that candle close that this next monthly candle, the month of March, is going to be red. Okay, it's not 100% going to be. If we get over 25,200, obviously it's going to be green, but there's an increased probability. Now, if we look at the 2017 one, we saw that happen. We saw a doji candle print, but we still saw that next month candle turn green. So guys, it's not 100% probability, but there's an increased probability. It is more likely that we do see March red if we're going purely off candlestick analysis. If we're going off price action analysis, if 25,200 breaks, we will most likely see March end up being green. We'll talk about that in today's video. So let's get back to the daily chart, guys. As you can see, there's so much happening on this chart. It's been really interesting. It's been one of the most interesting months, I think, for Bitcoin for a very long time, just because of how, as I've been saying, how important 25k is. It's genuinely one of the most important levels, if not the most important levels we've tested on Bitcoin for nearly a whole year, or I'll say over a year, because not only, guys, is it the trigger point for a macro uptrend to develop, but if we reject from this point, we could be potentially breaking the 4-year cycle, because we've never seen a strong rejection from the 200, from the 50 EMA, from the trigger point of an uptrend after a bear market bottom. We've never seen that before. It'll be a first time we've seen this kind of thing occur, and it's hard to say what would happen in the future if we do see this. How low could Bitcoin go? It could go quite low. Obviously, we'll talk about it in a second. But again, guys, it is quite scary. It's something to definitely look out for. But that is why this 25k level has been so important, because such a strong resistance becomes such a strong support if we get above it. So right now, from a daily structural stance, we saw a breakout of the descending falling wedge. Okay, we saw the falling wedge. We saw the measured move taken from the first high to the first low. That measured move dragged us right back to 25k. We ticked it off. Okay, our target on the breakout was reached. In fact, we bought on the breakout, we brought at 16.5k and we bought 18k. Our target was reached perfectly. Now, since then, we have seen an uptrend develop on Bitcoin. There's our uptrending support line right over here. We'll go down to a smaller time frame so you can see it. A 12-hour time frame. You can see an uptrending support line. Currently, along this uptrending support line, we have seen many retests and rejection of 25k, but more importantly, we've been seeing decreasing momentum, right? We're seeing decreasing momentum as the price has been rising. It's pretty obvious what's happening, guys. We're seeing weakness in the trend, and we've been saying this for a long time. The trend is weakening. It's more likely that we see this pullback than it is a breakthrough. So where will that pullback take us? Well, we can take a look at two things. We can do a measured move analysis from a rising wedge. Now, a measured move analysis from the rising wedge, we can go ahead and take 2 points. The first point in this instance is going to be the first high and the bottom, and we can go ahead and apply that to the breakdown point. This would take us from a maximum drop all the way back down to 18,200, okay? That is the maximum, absolute lowest point Bitcoin can go based on this macro structure. Similar to what we said before, we had a falling wedge structure, right? The absolute highest Bitcoin went from that falling wedge structure was the measured move from this bottom here to this top here, applying that to the breakout point. The absolute maximum Bitcoin could have gone was 26,000, but it went to that top high over here, reaching that target. A similar thing could happen here, guys. The top of our first initial touch was here, that second touch being over here. That is our measured move. Take that from the breakdown point, drag it across. That is that maximum target. So looking at 18,200. Now, it is unlikely we reach that maximum target, but that is going to be the maximum target for the bearish move toward the downside if this uptrend breaks. The next lower targets, we're looking at the prior low, 21,500 to 21,800. Below that, we're looking for prior lows once more. We're looking for 22,500. Sorry, my bad. 20,500. We're looking for psychological supports, whole numbers, 20,000. And we're looking for our weekly VRPV at 19,100 to 19,200. Those are the major bounce points if the price moves toward the downside. Now, on the upside, guys, is there a chance for Bitcoin to see one more leg upwards? I've said this many times. There is still a chance Bitcoin to see that. While we're in this uptrend, the uptrend is still active, and therefore the possibility for a bounce upwards is likely. Now, we do have to understand that the trend we're in is bearish, right? So even if we see one more move towards the upside, unless we completely invalidate this bearish structure we've formed, the move toward the upside will eventually result in a pullback which will crash below this uptrend support and send us lower, okay? Now, there are ways in which we can invalidate this trend, and I'll talk about it in a second, but let's talk about that top move. The top move, the highest we expect Bitcoin to go would be 25,600, or a liquidation wick to 26,200 and then a crash back down. That would be the bullish scenario for Bitcoin here. A bounce here, a rally toward the upside, liquidation wick, and then a strong crash toward the downside. Now, the only way Bitcoin could invalidate this bearish structure is if we get an aggressive move toward the upside. So strong, we push past 22,600, and as we come back down, instead of breaking back below this trend line, we find support on that trend line and continue upwards to that next range. But either way, that next range also is going to be our yearly resistance. So those are the 2 or 3 different scenarios we can see on Bitcoin. Again, until we have that breakdown here on Bitcoin, we do have to be aware a bounce is definitely still possible, but when we get that breakdown, we are looking for a lowest target of 18,200. You have to be prepared, guys. If you're not prepared, you're going to be caught off guard. Let's go ahead and take a look at a few more indicators. Let's go ahead and take a look at the Gaussian channel and the market cipher A, and then we'll move on to the small time frame and do our short-term analysis. On the 12-hour chart, guys, again, we see a lot of weakness here. We can see the price entering the Gaussian channel, which signifies weakness. The 50 EMA, the price is hovering around the 50 EMA. It is consolidating, it's compressing, it's going to make up its next move pretty soon, whether or not it's going to expand away from that 50 EMA or compress towards it and crash down. Either way, that will facilitate the bounce or that breakdown. And again, guys, if we break through our midline of the Gaussian channel, which is representing the uptrend, we will be breaking through the Gaussian channel. The likelihood we lose the support range increases if we break down from this trend line. Moving to a daily chart, let's see what that looks like. On a daily chart, guys, we do see the Gaussian channel pushing upwards here, nearly coming over the 50 EMA. Again, that is a sign of weakness in the trend. The trend is definitely still losing strength over here. Not what we like to see. On a 3-day chart, obviously the trend is going to look even stronger. We do have a green channel over here printing on the Gaussian channel with the 50 EMA moving past the Gaussian channel, signifying the trend is quite strong. But again, guys, it's lagging. The 3-day chart is very lagging. We do have to keep that in mind. But what this data does tell us, which is larger time frame data does tell us, even though it is lagging and we can still see a pullback, the probability of new lows are still relatively small, okay? The macro data is on a larger spectrum. You know, we're looking at it like a 5-day, a 10-day, a 2-week. It is definitely starting to get more and more bullish. The likelihood we flip that all the way toward the downside, it would require some incredibly bearish move toward the downside, something below 18,200 to trigger anything towards a new low. Unless we get under 19,200 VRPV on the weekly and 18,200, which will be that low point over here, it's very unlikely we go to new lows. If we lose 18,200, it is almost guaranteed we go to new lows. Let's quickly finish up on the short term, and then we'll let you guys get on with your day. At the moment, we can see Bitcoin has been consolidating along, what is it? The horizontal resistance at 23,600 to 23,800, right? We're seeing so many scam wicks, man, and so much liquidation. Look at these wicks, insane wicks over here, guys, chopping people at the market. Absolute chops. The wicks on the price action lately have been insane. We're seeing so many long wicks, so much liquidation, and you can see that on the data. You can see a lot of money is being liquidated every single day now of all these wicks, and that is kind of expected while we are so indecisive at resistance. If we're wanting to see more smooth and more clean and predictable price action, we have to zoom out and refer back to that macro chart. My best advice is now, continue to scalp trade with tight stop losses. Remember, your objective in trading is not to win every trade. You cannot win every single trade. Take a look at my month. I'll have to bring it up next week. I did like, I think it was 32 trades for a month. I had about a 64% win rate on my personal scalps, and I had over a 500% return on my investment for my scalp trading. So it's not about winning every single trade. It is about entering the trades that have the highest probability of winning, okay, but also have the best risk return ratio. So when you win a trade, it will cover 2 or 3 losses. When you make that loss, it's not a big deal. You move on to the next. It's all about probabilities, guys. Trading is 100% statistical and about your probabilities, okay? If you're taking poor probability trades, you're gonna end up losing a net loss no matter how many wins you get, because the wins and the losses are irrelevant. It doesn't matter how many times you win, it doesn't matter how many times you lose. It's about that margins within those trades that reflect on your overall net profit, which is important. I see a lot of people getting stressed out about losing. They're so scared of losing, they make irrational decisions, they keep trades open longer than they should, they keep adjusting that stop loss down. I've said it before, your biggest losses in trading will not come from losing trades. Your biggest losses in trading will come from emotional decisions and poor risk management, okay? A loss is not the end of the world. The end of the world is when you turn that loss into something 5 or 6 times bigger than it should have been because you couldn't accept the fact that you took a loss on a trade, okay? Looking at the short term really quickly, guys, like I said, we've rejected from this point multiple times. Going to such a 4-hour chart, we can see again, it is not starting to look very good for Bitcoin. We are, of course, looking very bearish here. We're losing these highs. We've rejected from this point now, I don't know, more times than I can even count. Like, I'm not even gonna try to count it. It's been many, many times, looking at 5 or 6 times now. Look how many wicks we've had in that range. Again, this is not a good sign for Bitcoin. We are coming up to retest that uptrend pretty soon. I think it's around over here on that macro chart. So we do lose that level. We can expect the price to fall all the way back down to these low levels. Moving on to the VRPV really quickly, you can see on the monthly for the VRP, within that monthly range, that chunk of support is still sitting toward the downside, but we do have some large resistance and support right above and below us. So we are gonna still be in this zone of indecision until we really drop below 23K. 23K is going to really be that trigger point that initiates a strong burst of directional and decisive volatility in the market that will push the price. Anyway, guys, I'm going to leave the video. If you've got any questions, leave them down below. I'll catch you in the next one. Thanks for watching.